everyone, and welcome to Tortoise. Welcome to our newsroom, where we hope to try and understand not the latest breaking news, but what's driving it. And with that in mind, we couldn't be happier than to welcome Ray Dalio, not just the founder of Bridgewater, but now probably increasingly well known for a man who is trying to understand what's driving the news on the biggest issues that we face, what's happening in the world of finance, how that connects to inequality, instability, and the possibilities of internal disorder in the US and the West, and then how that relates in turn to what's happening geopolitically between the West and the East, between the US and China in particular. As I said, my name's James Harding. I'm the editor and co-founder of Tortoise, and actually, in the spirit of slow news, I should be honest, I've really been hoping to have this conversation with you, Ray, for a couple of years, because at almost exactly the time that we set up Tortoise, I think it must have been the spring, April or so of 2019, you wrote a long essay about why and how capitalism needs to be reformed. And it was one of those moments where people said, well, hang on a second, how is it possible that a person who's made such a success of capitalism is now questioning it quite so fundamentally? And so I hope that in the course of this hour, we can get to all of those issues. I should just say to people who haven't been at a Tortoise ThinkIn before, firstly, and most importantly, a very warm welcome. The second thing is, the way a ThinkIn works is it's intended to be a bit like an open news meeting. When I worked, whether it was the Times or the FT or the BBC, we'd be lucky enough to get someone like Ray Dalio in, and we'd all sit around the table, and it would be pretty much a conversation. You know, he'd have things to say, but lots of people would share their views. And that's what we really want to do in a ThinkIn. We want people to say, well, that's interesting, you think this, Ray, I think that, and have something that feels like an open conversation. So my colleague Emily Ben is here. She's going to marshal the chat, make sure that I don't miss anything, and make sure that as many of you as possible get to weigh in a conversation with Ray. You missed in the green room, or at least our digital green room before we got started, an interesting encounter between Ray and Emily on the joys of risk parity. If we go down that particular avenue, please steer me back to something that I actually understand. But so that's the most important thing. Raise your hand, make a point in the chat, and we'll bring you in. It should be a conversation, not just a to and fro between me and Ray. But I do want to make sure we try and keep some structure, because I'd like to see if we can really deal with the kind of financial picture that Ray paints about the capital market cycle, then get into these big questions about inequality and instability, and then get to the bigger East-West, US-China. These are the sort of three elements of Ray's book, Principles for a Changing World Order. And as you saw at the beginning, if you're a Tortoise member, please come along and get one. We would have been able to get them to you in person if we were in person, but just message me, or in fact, message Mark and Andrew if you're interested. Ray, I'm going to start with something I don't normally do, which is to say that you've written the first book that I've ever read where I actually got intimidated by the blurbs. At the very start of the book, you've got Henry Kissinger saying this is an urgent warning. You've got Larry Summers saying history is too important to be left to historians. You've got Hank Paulson, the former Treasury Secretary, saying when Ray Dalio speaks, I listen. By the time you've read the blurbs, you think, oh my God, I'm sort of quaking and I'm anxious. What prompted you, if you like, to leave the relative security, if you like, of running a large hedge fund where you're not a public figure, and try and say, look, I want to engage in these big subjects, the questions of the way in which our society and our democracy is run?
Well, I'm in a different phase of my life. I'm 72 years old. I think life sort of has three phases of it. The first phase is you're dependent on others and you're trying to learn. Second phase, you graduate school and increasingly others are dependent on you and you're trying to be successful. And then in the third phase, which I'm now in transitioning to it, you want others to be successful without you, and you want to pass along what you've learned that's been helpful. And so I started that when I stepped out as the CEO about 5 years ago. I passed along some of the principles that helped me. And that's what I'm doing. In this particular case, I'm actively engaged. I've been a global macro investor for 50 years. So that means I have to study how the world works in these ways. And three big things happened that never happened in my lifetime before. And I learned before by most of whatever mistakes I made, most of them I learned hadn't happened in my lifetime before. First in 1971 with the devaluation of the dollar, but I won't get into that. But the three big things are first, the financial. The creation of a lot of debt and the monetization of that. In other words, the central bank printing a lot of money and buying that debt, that magnitude, when you hit zero interest rates, that is something that has never happened in our lifetimes before, anything like this. And it has to do with the rise and decline of great empires and currencies. The second is the amount of wealth gaps, and with them values gaps and political gaps have not happened in this degree since 1900. I'd like to show numbers and charts, and so this is documented. Wow. And that, of course, created populism of the left and populism of the right. And it prompted me to also write the piece you're referring to, because capitalism wasn't working. If you're saying, what is the goal? And goal is something like equal opportunity and a system that's working for most of the people. It wasn't working for mechanical reasons. So anyway, that's the second influence, that gap that we're seeing. And January 6th is such a good anniversary of it. And the third, of course, is the rising of a great power to challenge the existing great power and the existing world order. You know, there's a pattern in history. You have wars for internal wars sometimes and external wars. And when you have that, then someone or group wins the wars, and then they determine what the rules are. Last time that happened, 1945, after World War II, and then the winners carved up the world and determined what the world is. And so where there's a cycle of the rising of that. So in order to understand those things, which come along infrequently, and they're part of big cycles, I needed to go back for 500 years to see these and look in history. And I studied for the last 500 years because I wanted to see over that period of time. There was the Dutch rise and decline. They became the largest trading partner, the richest, the British Empire, the rise and decline, and the American Empire. And then I studied all the other countries, the Germany and Russia, and then also the dynasties in China since the 600 or so, which was the Tang Dynasty. So I felt compelled. I think it's so important. And I think their comments are so right that it is important that we understand the lessons of history, and we understand from there the mechanics of how things happen and how that means where we're headed and the choices we have. I want to get into the three acts of the book, exactly as you describe it: the financial, the debt, the inequality, the instability, and then the great power and the changing world order. At the outset of the book, Ray, you describe your worldview as like a corkscrew. The world sort of gradually improving, but with these disruptions along the way. Cycles.
And can you just explain why you see these cycles coming and why you think they repeat?
Okay, well, it's so interesting because I'm like an engineer and mechanic, right? I'm not an ideologue. I like to create literally the model and see the model. And so what you see over time, I could almost pull it right out of the book and show you a chart. that if you saw evolution, that man's ability to learn, change, adapt, and you were to see that reflected in life expectancy, per capita real GDP numbers, and so on, and you were to see that chart, which I wish I could call up, but I can't quickly access it, you would see that we have an evolution to longer life, better conditions, and so on, because man's inventiveness builds on prior gains. And so there's that evolutionary movement up. And you see that over time, almost so that the big events that we experience up close, like wars or depressions, don't even show up in that chart, barely show up as blips. So that's the force that is this upward movement. Around that, we see cycles that repeat over and over again. Like I gave the example, 1944, 45, we began a new world order. You can go back to before that, it was the Treaty of Versailles or the Peace of Westphalia, and so on, so that there are these cycles. And I'd love to be able to describe a typical cycle so that everybody understands that typical cycle. But you see these cycles, and the cycles are financial, but they're intertwined with, there's a finance part of it, wealth and money matters a lot. And then there's a power part of that. Most of this is about wealth and power, and there are these cycles. And so if you literally decomposed it and recomposed it, of those forces, it looks like that. It's upward pointing with these cycles around it. And those cycles interact. The political cycle interacts with the economic cycle, which interacts with the international geopolitical cycle, and to create those cycles that are upward, happen around that upward trajectory.
So Ray, can we do the first element of things first then? Shall we talk about the financial? Why is there so much debt at the moment? And what's the consequence of having low interest rates and rising inflation? What happens next?
Again, I'm like a mechanic. And so I'm trying to explain it mechanistically. Debt produces a cycle. When you give debt, you give buying power. That's called credit. And you give credit to everybody, and they can buy more. That's stimulative. But then there comes also the day of paying back that credit. And when you pay back that credit, that's depressing. And over these cycles, when you start a new debt cycle, a long-term debt cycle, like in a war and so on, you wipe out a lot of that stuff, and then you build a cycle. And naturally, there's a desire to have more spending power. It's politically desirable and everything. People have more spending power, they give it, but then it has consequences. So you tend to see debts rise relative to incomes. And that's stimulative in the early part, but it's depressing in the longer part. And then what happens as you get there, and you have limitations to how that happens, you hit a zero interest rate. Okay, used to be you would lower your interest rate, but we started in 2008, and that was the same thing that happened in March 1933. You hit zero interest rates. And then what you have to do is you have to print money, okay, because you can't stimulate that credit. And also you have the debt burdens that you need money to service, and everybody needs more money. And so you need more money. And yet money is not hard. Money is not limited. It is created. It's a fiat money system. So when we got into that downturn, and you have zero interest rates, and you need money, and you have to send out checks, where are you going to get it from? So the way that works is that governments borrow, they have to send out the checks, because central governments can determine how to spend or tax money, but they can't print money. And central banks can print money, but they don't get to where to send out to determine where it goes. And so what you have is the government needing to send out money. And then you have the central bank. If the central bank didn't print the money and so on, there wouldn't be enough money to send out. So they have to print the money, and they print the money to buy the bonds of the government and so on. And that then increases the supply of money and credit, which devalues it. It devalues it in relationship to goods, services, and financial assets. So what you see, what's happening, you see that there's an increased supply of money and credit. Everybody gets checks. The net worths, as we calculate it, of people go up, but they don't get richer by printing money. So as they have that greater amount of money, they buy more goods, services, and financial assets. And if the supply of money and credit exceeds the quantity of goods sold, you have inflation in those things. And that's the dynamic that's going on. And the more you have that dynamic, the more you have that happen. And you can't get away from that dynamic, because think of it this way. We are spending more than we're earning.
But what I want to know then is what happens then, Ray? So when do you pay the ferryman?
Well, what happens is, quite literally, if you continue with the cycle, there's bad returns in holding that debt, cash or bonds. They have negative, significantly negative real returns. And then investors start to change their thinking, because most everybody thinks about how rich they are based on how much money they have, and they don't adjust that for inflation. And so what they learn, and what people are learning now, is my return greater than my inflation rate or less than my inflation rate? And then they start to sell the bonds, and they start to sell that. And that produces an imbalance, because you need all this more money that you have to borrow to sell the debt. Plus you get selling by those who no longer want to hold it. And that puts the central bank in a difficult position, because the central bank is then caught, like, if they don't print the money, then interest rates go up and the whole thing shuts down because they're not providing that same credit, or they have to print more money. And you begin a spiral that is like that changes the value of money, changes inflation. And that is where, you get late in the cycle, and that inflationary spiral, which is, sort of what we're in the brink of. And in the chapter, I think it's the third chapter, which shows the value of money over periods of time. We go back, show 750 currencies for, I think it was since 1700. And you could see that under these circumstances, all of them, only 20% of them haven't today exist, and they've either been destroyed or devalued, and it's that part of the cycle that happens.
And Ray, so you said we're on the brink of an inflationary cycle. Is there anything that's going to stop us from getting into an inflationary cycle?
The only things that stop us is the not producing a lot more money and credit, and when that happens, that means not producing enough buying power. And then you have recession risk. And what you start to think about, particularly when we're talking about the political cycle, today everyone wants more money, and they want more money for everything. And I'm not saying more money isn't needed. There's a big wealth gap.
But I just want to understand. You're saying most likely we are going to be in for a period of quite high inflation.
Yeah, we're going to be teetering between that and the the downturn. The trade-off is going to become much, much more difficult. So we're in a phase today where the central banks are beginning to tighten money because they've gotten ahead, but they will not raise interest rates. They cannot afford to raise interest rates to a high enough level that one will have a positive real return from holding those deposits. So inflation will continue, and then the desire to sell those assets will pick up, and the trade-off will become worse. So it's going to be the trade-offs between inflation and growth will become much more difficult.
So, and Ray, then just to be clear, if it's a bad idea in this circumstance where there's basically next to no return on cash or next to no meaningful return on bonds, if you move your money out of those things, what are the better places to put money in?
Well, the most important thing is to have a well-diversified portfolio of assets that is not in cash and those things, in my opinion, and not in debt in those things. And diversification is very important. We were talking about that before, the all-weather strategy or a balanced strategy. And I won't get into all the particulars because that would take us up the whole session. But the way assets work is that for one to go up, another one goes down, and they change in that way. And by understanding the balance, and so that might include things like holding inflation index bonds, you know, thinking real assets, and even borrowing money, but to get that balance right. It includes diversification of countries, not just asset class diversification.
Diversification of countries. So for example, will some countries, do you expect in the next 5 years, that hold reserve currency debt, i.e. US dollar debt, do you think you're going to see some of those countries go bust?
Let me phrase it this way. I think the world right now is holding a lot of US dollar denominated debt because, as in all reserve currency cycles, when it becomes a reserve currency, it becomes the currency around the world, and others want to save in it. And so the saving in it means buying the debt of it. That's part of the ingredient in the cycle. The country gets deeper into debt because they borrow from other countries. And so if you look at the portfolio composition, in many countries' cases, central banks, sovereign wealth funds, or institutional investors, they're holding a disproportionately large amount of dollar-denominated debt, a lot. And with that, and this set of conditions, they're less inclined to want to add, and there's a big need to add, and so the central banks will be more inclined to print more money and mechanistically. So the portfolio should be in assets that are not sensitive to that. So it could be real estate, it could be gold, it could be alternative, in a right balance. And in also countries that have, my quick checklist is 3 things that I look at when I look around at countries. First, do they have good finances, which is easy to see? Do they, meaning like an individual or company, do they earn more than they spend? And do they, what's their balance sheet look like? Do they have more assets than liabilities? So are they financially capable? This is a big thing. Some are on the edge and some aren't. Second, do they have internal order or disorder? If they have internal conflict, so we'll get to that in a minute, but that's a big factor. It produces wealth clashes, and it also produces disorder. And we'll talk about that in the United States and elsewhere. And then third, are they prone to have a threatening external conflict? And so you can kind of go around the world and evaluate those. But those are basically three fundamental ingredients that are, just of paramount importance in thinking about, where we'll be good, prosperous, and safe. I'm also, I do like the new technologies, but everything has a price in terms of the inventiveness because the world order is going to change radically very quickly. Other issues enter into it as things like cyber risk and so on. But anyway, I'm getting off track.
Ray, let's. I want to make sure we get to the fundamental question about instability, inequality, and potential civil strife. Just one final question on the finance: is Bitcoin a bubble?
Well, Bitcoin is an alternative money. There's types of money which is, what's money? It has imputed value. It doesn't have intrinsic value, and it has lots of qualities of money. That doesn't say how good it is or not. It's been impressive for 11 years. It hasn't been hacked. It's been accepted worldwide and so on. I think it has much less potential than others, and I think it's not going to be a competitor of gold. I mean, it's like an alternative gold, and we can get into the particulars of it. But yes, it is to some extent. Money has two purposes: a medium.
Sorry, Ray, forgive me for interrupting.
Wealth.
Ray.
Sorry.
So, Ray, forgive me for interrupting, because I'm sorry, I'm not sure I entirely followed. So you're saying it won't be an alternative to gold, but it is a serious investment?
No, I would phrase it this way. For some, it will be an alternative to gold, but not nearly, I don't think it'll ever be nearly as important as gold. So when I look at it, I look at how much gold there is and how much demand is, a percentage of the portfolio, and therefore I calculate what the price of Bitcoin might do. I won't digress into all of that, but I think people should have a little bit. I have a very little bit in it, and that's what I think. But we're in a world now of multiple currencies, and we'll redefine what currencies and what money is very quickly. You're having NFTs, and then you're having digital currencies, and China's digital renminbi probably will go be a competitor. And we're all going to be thinking about what is money. And what I mean by money is a storehold of wealth that you can easily move from one country to another, that is exchangeable in all of those countries. It's not like real estate. Real estate is an asset that is less subject to devaluation, but it's not a medium of exchange or a storehold of wealth that can be moved or transacted. Those alternative monies, we're going to have a number, and we're going to work out how that will work.
So by the way, I should just say, I don't know whether Stoyan Angelov is here, because Stoyan has made this point about NFTs and whether or not NFTs are a good investment. We can come back to that. I don't know whether Stoyan's there, so flag to me and I'll bring you in a second. But let's get to the heart of the sort of the most central and, if you like, challenging and worrying element of the book, which is around the likelihood of some kind of civil strife in the United States. And I think you put it at just under a 1 in 3 chance, Ray. And I wondered why you say that, why you think that there is a real possibility of some kind of civil conflict in the US.
Well, it's simple, really. We're moving more and more toward extremes and that have irreconcilable differences, and that the rule of law and the Constitution will not be impediments to getting what they want. I have a principle that when the causes that people are behind are more important to them than the system is in jeopardy. And that's the case, and it's progressing. I go through many cases in there of the dynamic that the middle is lost. In the French Revolution, the Russian Revolution, the Chinese Revolution, the Cuban Revolution, and so on, you could always see that there were moderates, and then but you get to the point where there can be no more moderates, because like in Europe or in the world in 1930 to 45, 4 democracies chose to be autocratic governments because of the conflict, and will somebody get control of it, because you have to pick a side. They'll say to you, pick a side and fight for our side. And so you see that germinating. You started to see it with populism in developed countries, and you're seeing it now. So it's not difficult to imagine, for example, in the 2024 election, that neither side will accept losing. That's not difficult to imagine. And if neither side accepts losing, then you go to not the rule of law and not the Constitution, but you go to power. And you're seeing right now in the United States, even changes of where people are living, partially because of taxes, but partially because of the notion of, I want to be with this group or that group, and places where there's large wealth gaps. And in hospitable environments, there's a deterioration in some cases, in New York, San Francisco, and places that make those, to some people, less hospitable. And when they move, it changes the tax base. So it makes things, there's a spiral or hollowing out, because tax bases leave, services can't be as good, people become more dense, and so on.
Sorry, just for those of us who are trying to understand the picture you're painting, I think we can all understand 2 political parties, neither of which accept the result of the 2024 election, and worry to ourselves about what that means. I'm not as clear what you're describing in terms of the United States of America. Are you talking about fundamentally different jurisdictions, the breakdown of that union, or are you talking about deep divisions within each state?
I'm talking about the fact that in each party, there are moderates and let's call it more extremist elements. And there's a dynamic that is going on to make the winners of each of those parties in the primaries and so on tend to be more extreme, that won't work across party lines. I show charts in the book that go back to 1900, and it shows how conservative or how liberal each of the parties are. They're the most that they've ever been, conservative, and it shows the amount of voting across party lines, which is the least it's ever been. And so if you actually take surveys of hate between the parties, I forgot it's the Republican or Democrats, but one of them, 15% would hope the other members of the party would die, and 10% of the other party hopes the members would die, and they don't want to have their children marry members of the other party. It's becomes so extreme. And so that extremity is happening to create that. Now that's creating naturally shifts in where people want to live. You know, you see Elon Musk, for example, or a number of people have gone from California to Texas because partially there's a different tax, but more broadly, there's a different philosophy and so on, and they're making those kinds of moves. So I would expect that it's reasonable to expect that the issue of federal versus state differences can become more extreme. In other words, in the United States, you can go to a state and they can have state rights and so on. And then there could be tensions. For example, there was the question of sanctuary cities. In other words, what happens if the federal government says, you need to do this, and the state or local government says, I won't do that. How is that resolved? And that then becomes resolved by a power, not a rule of law. And so that dynamic is happening. And if you plot it in relationship to the other plots that I'm referring to, you can almost know here's how the normal cycle works, and then just plot the dots and see where it's happening. You could see whether there's a divergence from that path or whether we're staying on that path. And so far we're staying on that path. So what happened last January 6th did not happen out of the blue. It happened because of things that were happening, and you can imagine. So I would imagine something like I'm describing.
So Ray, I'm going to put a pause on you, if I might, because there are a number of people, as you've been talking, who've been making these really interesting points in the chat. Some of them about whether we should turn to GDP, the extent to which the hollow itself has been, the middle has been hollowed out, how we emphasize education and technology. And I want to bring in a few of those points and then ask you to comment on them, if I might. I'm going to ask Fadlan Effendi, who's made a number of points in the chat, but particularly Fadlan, this point about the extent to which what's happening in finance is, in your view, impacting what's happening in terms of the cohesion of society. I'd like to bring in John Alexander, who's made the point about conflict being inevitable. It was his phrase. And then there's some interesting points about just the gap between rich and poor and the scale of that gap that Araby Beveridge has made, and I see that Tyrell Volker's made about GDP. So I'm going to bring all of those people in. Fadlan first. Fadlan, I just hope you can unmute so we can hear you.
Oh, hey. Thanks for having me. Hi. Thanks for having me. My name is actually Michael Harding. I'm actually using my business partner's laptop.
No.
Yeah. Small world.
It's lucky you didn't use your name, Michael, because I would have thought it was my dad and not invited you in. So there you are.
Thank you. Ray, absolutely massive fan of yours. Recently been reading pretty much everything that you produce and that you put out. I think your insight is probably one of the most important insights in the world. Just simply because people haven't lived in China or been to China and have opinions about things that they haven't actually ever experienced themselves. And one of the things that I think is, I'd love to get your take on, is education in the Web3 format and what that's going to do for African nations and other kind of deprived countries where education always, like in your book, you show that education causes innovation, and innovation then leads to the new financial centers. And this is what clearly has happened in China, because their education results outweigh everybody's. So how do you see that affecting African nations, and how the rise in innovation, especially with AI and super co-working spaces, that will inevitably cause hyper innovation and inevitably cause hyper deflation because of the advances? If that question's been answered.
Michael, yes, please. And I'm going to just put a break on Ray before you respond, because I'd like to take a few points at the same time. John Alexander, do you want to? You said conflict is inevitable, and it's not dissimilar from Ray's point of view. Do you want to explain why? Do we have the power on your mute button, or do you have that power? There you do. There you are.
I'm in again. Hello. Yeah. No, I just really resonated with the idea of that as we hollow out the sort of the center ground or the middle or any sort of moderate space, then it becomes a dynamic of picking sides. And I was partly just accentuating that, but I guess if there's a question off the back of that, it's probably one that Tom McCallum's expressed in the chat better than me, which is if that is the case, and particularly given Ray's expertise and networks and community, like what is the agency of the capital markets? What is the agency of the investment world in shifting its mode of working such that it doesn't sort of naturally or inevitably accentuate that sort of hollowing out and perhaps actually sort of helps break it down, helps bring things back together? What changes, what structures, what processes could be undertaken that actually would help create some space for people to come together in that, rather than financially, if that is a key driver?
John, thank you. And Ray, before we just do that, I just wanted to, this question has gone around. It's certainly knocked around the FT for a fair amount of time and more widely, which was this question about GDP, whether we're measuring the right things. And Tyrell Volker, Tyrell, I don't know whether you can weigh in, whether we've given you the power to use your own mic. If
yeah,
you're
there
there,
we go.
yes, you are. There you are. Hello, hello. Do
You
want to
thank you, James. So this is really great. And Ray, thank you, and good evening to all. So my name is Major Ty Volker. I work for the Army, British Army's kind of historical conflict think tank, and it's a really interesting debate. And Ray, I love your work. The main issue I can kind of see here is this kind of centralization, decentralization piece as we go through these cycles. And one of the big kind of problems I see in your work as identified is that agency piece. A lot of the agency is working in linear policy making, but we're entering periods of exponential change now. And the question, I'll keep it narrow as I put in the chat, is how do we then start to guide our forward thinking, both economically and politically, geostrategically, and all these senses, when a lot of the instruments that we're flying by are for another age? You know, the logic of those things, and let's focus very specifically on GDP here, was for the industrial age. It was for production, and it was kind of fairly objective. You know, you could get a very good credibility on it versus where we're going with services and how we can then start to measure both growth, productivity, but also when we start looking at security dilemmas, the relative power balances between different agents. And again, I don't necessarily think it's about nation states as we move forward, because I think they've been unprofitable for about 100 years, and we already see them breaking down into smaller units of account to try and be more competitive as an owner of violence. But thank you.
Ty, thank you very much. Ray, do you want to have a go at each of those? Education,
sure.
finance, agent of change, and GDP, and our flying instruments.
Yes, I'll take those, and I'll offer my thoughts. I want to emphasize that third is the rising of a great power to challenging existing great power, and these things happening simultaneously, and what that means in terms of the dynamic, because we've touched on the first, and we've touched on the second, but we haven't gotten to the third, and they're all integrated. And there's also a cycle that's a typical cycle that I want to make sure I describe at some point, from one new order to the next new order, and how that works. But let me take that first, and I'm going to, in the order that they've been raised. Yes, and it really starts with the cycle. So what happens is there's a cycle that creates a new beginning that comes out of a conflict, a war. And the war is a terrible, terrible thing. But it establishes the new order because the winners determine what the new order is. It's the reason, for example, that the United Nations is in New York, the World Bank and IMF are in Washington, D.C., because the United States had 80% of the world's money, which was gold at the time, and we had a new world order, okay? And then after that world order, you have a period of peace and prosperity, because nobody wants to fight the winner of the war. And also war has been so hellacious that they don't want it. And wars tend to produce also a great equaling, tend to reduce wealth gaps and so on, and eliminate debts and all of that. And then you begin the cycle. And I'm glad you saw the charts in the book, because the cycle of what happens first is education. You build a new system, you build a better system, and you have a period of peace and prosperity. And you see then education advantages and improvements. And that's a long leading indicator of the things that happen. And I won't take you all through all those things, they're in the book. But so I'm answering the first question in terms of education and the importance of that in converting that. And by the way, when I mean education, I mean not just education in terms of the capacity to read and write and process, but the the ability to be civil, like raising your children in a way where they understand civility and how to work with others, and so on. And that education, the better that education is, then the more uplifting it is, and it passes through to all of the things that we mentioned. In terms of the question, in terms of Africa and what that means for Africa, I'm afraid I don't know enough about the particulars of what is going on in most African countries because of the fact that, I'll know the G20 plus others well, but I don't know much beyond that. So I can't answer your question as it particularly applies there, but these things apply to most and they're measurable. In terms of the question of the system and the system working and how should it work, the agency mode, as you called it, I look at it as a mechanic, and what happens is that the profit system does not accomplish all of its goals. In other words, the profit system and capitalism as it's structured is self-reinforcing for the rich and tends to produce less broad opportunities. For example, if you earn more money, your children could get a better education and they could be privileged and so on. And all societies throughout history that have done the best have drawn from the broadest population possible, because you can't tell where those people, that the talents are going to come from. And so it draws it from that, but they tend to be, capitalism won't deal with whether it's best for most people. And by the way, I don't mean just distributing wealth, I mean distributing productivity. And so as a result of that, I think of as a mechanic, the engineering of that process. For example, education. We're talking about education. Education is one of the best investments that a country can make in raising its living standards and paying for better quality everything, right? I live in the state of Connecticut. There's a large wealth gap, and 22% of the high school students are either disengaged or disconnected. Connecticut, one of the richest states, 22%. That means disengaged means that they have an absentee rate that's greater than 25% and they're failing classes. And disconnected means they don't know where they are anymore because they've dropped out of school. 22%, 1 out of 5. Now, the cost of that to the society is enormous. I mean, from whatever it means in both the unemployment, but also incarcerations and so on and so forth. So investing properly in proper education, but the system structurally has impediments to doing those types of things. Or let's say taking the environment. The environmental costs are not incorporated into the prices of things. And so the environment is necessarily going to be suffered. So I think that there needs to be, and then there's polarity in resolving decisions. There's not effective decision-making because everybody's ideological. For me, by and large, if I was president of the United States or whatever, I would want to have first probably a bipartisan cabinet, but I would set aside some group that's the equivalent of the Manhattan Projects or something that brings together both sides who are both smart in understanding the education, the engineering of economics, and have them come up with a bipartisan plan. I almost don't care what the plan is, as long as it raises productivity, which raises living standards, and that people are in it together, because I think that this conflict is going to kill us. So yes, GDP is not an effective measure of the totality, because it measures things like partially the quantity and partially the prices of things. And the prices of things are themselves driven by who wants what. So if they want, luxury goods and expensive things, and that's how the voting is occurring, it won't capture the best thing. So I think you could measure these things by what the income levels are by quintile, and conditions are by quintile to say, are you measuring the most? I broke up in that study you're referring to it by quintiles. And I looked at what the bottom 60% of the country's conditions are, just to get a sense. That's the majority of the people. And you look at the majority of the people and their conditions in terms of what was their real income growth, or what are their balance sheets, or what are their education's financial conditions, what are their job opportunities, and so on. And it's a dismal picture, so you can't use just GDP as a measure. I think that's the answer to the second question. And on the third,
Ray, I'm going to interrupt. Ray,
centralization versus decentralization.
Ray, forgive me. Sorry, I'm just going to interrupt you just because I'm really aware of time, and we're going to miss the chance just to deal with the China issue, and we're going to miss the chance. Forgive me, just to address one other point, which I think is really important here. I don't know whether you saw Arabi Beverage made the point that there's been something like a 20-fold increase in the wealth gap in the last 30, 40 years. And I just wondered, because we'll come to the China-US thing in one moment, but I just wondered this central question, which obviously has trailed after you since you started talking about some of the big structural problems in capitalism, is around, and forgive me, I don't know you very well, so I just will put it to you directly, whether or not the problem that we've got, the inequality and the instability that we've got, is a problem of that wealth and power gap. And whether, to put it directly, the fact that we've never had more billionaires is a good thing or a bad thing.
It's a terrible thing that we don't have equal opportunity, and we don't have, and it's so much better to redistribute the wealth in a way that produces opportunity and productivity.
So how would you
in things like that? I experienced it. I came from a lower middle class family. My dad was a jazz musician. My mother was a stay-at-home mom. I went to a public high school. And I came out to a world that was largely equal opportunity. Okay. And I believe that equal opportunity and to have a dream, it's not a bad thing to have, great dreams and build those things, but most fundamentally is, what is the money used for? And most importantly, you must have equal opportunity, because first, you won't tap the broadest population. And secondly, it will implode. The system won't work, particularly when you have the combination of the three things. When you don't
I just want to ask you, sorry, you just said something very important. You just said you need equality of opportunity, you said, but then you need to redistribute that wealth. What's your mechanism of redistribution?
Well, I'm saying the best, there's two ways of looking at it. The best is to redistribute the wealth in a way that creates that equal opportunity. Like for the example I'm giving is like equal quality education, remediation of poverty in places that to produce those equal types of things. And there are so many good investments. I mean, like an investment in education is something that will raise its living standards, will produce an income, and so on. I'm not saying all can happen that way, but we have to broadly, so the highest priority are those things that are going to create greater equal opportunity and greater opportunities to be productive for all. History has shown that repeatedly, that that's the most effective way, and it's also the most equitable way.
Well, and Ray, forgive me, because we're now into our last 5 minutes and we're left with a colossal subject, which is this East-West external order disorder question. To cut to the chase, do you think that we are almost bound now to see some kind of conflict between the US and China?
Well, of course we're seeing conflicts. There are 5 types of wars, history has shown. There's a trade war. There's a technology war. There is a geopolitical influence war. There is a capital war. And there is a military war. Those are the 5 types of wars history has shown. We are certainly, you can call them conflicts or you can call them wars or competitions, it depends, but they're getting more and more vicious. The more vicious that they're becoming, the more likely they're wars. And we are certainly in the first 4 of those wars. And you could have a military war. Now, if you look at history over the last 500 years, when there's a rise of a great power to challenge the existing great power, and 12, that's happened 16 times. 12 of those times there have been military wars, but not necessarily. But there's been nothing like this. Russia never was comparable in economics and total resources. So this is going to be challenged because China's population is more than 4 times the size of the United States population. That means if it has a per capita income that's half, that it will be twice the size of the United States. And as a result of that, it'll be, a more powerful empire. And there are different ways of doing it.
So forgive me, just Max von Herter, I would bring him in, but we're just close on time. Just makes this point, which it says China is unequal, it's corrupt, and it has the worst system for redistribution of wealth. It's a dictatorship, and it's got issues of corruption and kleptocracy. How can you be bullish about Chinese growth? What makes you believe that it's going to continue to grow at the rates that the United States grows at? What the scale?
You've given me like 2 minutes to answer a complex question.
Yes.
Okay. And so what I would say is, since I started going to China in 1984, per capita income has increased 26 times. The poverty rate has gone from 88% to less than 1%. The longevity, life expectancy, has increased by 10 years, and a very slow rate of growth in economic activity in China is typically about twice what the rate of growth is in the United States or more developed countries. And we can get into the particulars of that. I'm not sure of anything, but as you look at that, that's a whole conversation that we should have at some time. I don't think it's obvious that China, with those set of circumstances, I think more fundamentally, you have a competition, and they have some approaches, and we have different approaches. And I'm an American who has grown up in this land of opportunity and lived the American dream, and I really think nothing could be better. And at the same time, I think that the most important thing is that each follows their own approach and be strong and do the things that are right, that are going to make the country strong. Because if you're strong economically and we're doing the things that we're talking about, then there's no worry about the external competition. So I'm more worried about the war with ourselves that we're having than that, because the system is not operating. So yes, there are things in China, there are things here, and I don't think we can just take for granted that system will be better, given better in that. I don't mean better in terms of ethically or the freedoms or different things. I mean that in terms of, let's say, the longer term strengths and the size of the economies and how they will conflict. I don't think we can just take for granted that our system or the system will work. We just have to focus on making ourselves very strong.
And on that note, I want to ask you one final thought, Ray. There's so much in this book, and by the way, the best thing to do is to go and either buy it or come to us and talk to us and get one. Do contact my colleague, as I said, Marks and Andrew. The very end of the book, you give us some guidance on, given the scale of these uncertainties, financial, internal, external, how we individually live our lives. If you were going to give us some advice on actually how we personally deal with this when you feel as though there's little agency that you've got in the face of these kinds of forces, what would that be?
Well, there's how we as a society, if we individually lived ourselves in a certain way, we'd have a better society. And then there's the answer to the question is, if we don't, what do we do? On the first, come to the middle, have the art of thoughtful disagreement, resolve the disagreements. If you're not in each other, we'll have wars, internal, external wars, and we will go through that cycle. I've, sort of principle. If you worry, you don't have to worry. If you don't worry, you need to worry. What I mean by that is if you don't worry, then I think that this will give you the reason to worry, then you could do things about it. And that will make your worry less risky. And I, as an individual, to understand how this works mechanically and to understand the changes that might occur, and to be able to create a protective mechanism, not only in how you invest or whatever, but where you are, and those kinds of things, which are explained in greater length in the book, are things to know. Don't be naive and unprepared for what's going on. Have the perspective and know how to navigate it is the most important thing, which is why I wrote the book and I'm trying to pass it along.
Well, listen, Ray Dalio, thank you very much. I need to first off apologize to the many, many people who still wanted to talk to you. We just didn't have time for everyone, and there was so much more to discuss. But thank you too. I think there's something strangely comforting at the end there about the idea that if you're worrying, don't worry, and if you aren't worrying, worry. Sorry, you wanted to come back?
Yeah, I want to make this clear. We have the power within us to have the greatest set of circumstances we possibly could, because we have more money, more riches, by any measure, more technologies. We've got more better conditions than we've ever had. And if we can work well together, the potential for making that increase is phenomenal. There's no good reason that we together cannot have the most fabulous future if we can work well together.
Okay, well, on that note, Ray Dalio, firstly, a happy new year to everyone. And on that note, Ray Dalio, thank you very much indeed. Hope to see you again. Join us next week at Tortoise. We've got a whole bunch of other think-ins and conversations to have. Ray Dalio, thanks very much. We can't give you a round of applause, but we can wave happily in your direction, Ray.